Today's headlines are dominated by sharp market shifts and regulatory challenges. The US-Iran conflict intensifies, affecting cryptocurrency prices significantly. We also see major developments in cryptocurrency regulations and institutional investments. Here are today's top 10 stories you need to know. Visa has officially launched its new stablecoin platform aimed at financial institutions. This innovation allows banks, fintech companies, and crypto platforms to mint, manage, and transfer stablecoins within a Visa-run ecosystem. The launch is a significant step in integrating cryptocurrencies into mainstream finance, validating predictions that traditional payment giants would increasingly embrace this technology. As cryptocurrencies gain traction, Visa's platform could streamline transactions and enhance the stability of digital currencies used for everyday payments. This move reflects a broader trend towards real-world assets rather than speculative tokens. It also addresses the growing demand for reliable payment solutions in the crypto space. The implications for global transactions could be profound, as Visa's infrastructure offers a familiar and trusted environment for both businesses and consumers. Looking ahead, the success of this platform could pave the way for further innovations in the stablecoin sector, potentially reshaping the landscape of digital finance. Rowe Price has introduced the first actively managed multi-token crypto exchange-traded fund, known as the Rowe Price Active Crypto ETF. Unlike traditional single-asset funds, this ETF allows for dynamic exposure across multiple cryptocurrencies. This innovation caters to investors seeking diversification in their crypto portfolios, reflecting a shift towards more sophisticated investment strategies in the digital asset space. The launch follows a series of significant ETF developments, including Goldman Sachs' recent filing for a Bitcoin premium ETF aimed at generating income. As institutional interest in cryptocurrencies continues to grow, products like TKNZ are likely to attract a broader investor base, including those wary of the volatility associated with single assets. The future of crypto ETFs looks promising, with potential regulatory changes further paving the way for more products. Investors will be keenly watching how this ETF performs in a turbulent market. The Grinex crypto exchange has suspended its operations following a cyber attack that resulted in the loss of approximately $13 million. This incident highlights the vulnerabilities of exchanges, particularly those under sanctions, as Grinex was linked to Russia. The attack exposes the growing security challenges faced by digital asset platforms, especially those involved in high-stakes transactions. It raises concerns about the safety of user assets and the potential for increased regulatory scrutiny in the wake of such breaches. Analysts suggest that this incident could lead to a reevaluation of security protocols across the crypto industry, prompting exchanges to implement more robust protective measures. The impact of such cyber threats can have far-reaching effects on investor confidence and the overall market environment. As Grinex navigates this crisis, the industry will be watching closely to see how it responds and what measures are taken to restore trust. Recent data indicates a marked divergence in cryptocurrency ETF flows, with Ether and Solana experiencing significant inflows, while Bitcoin ETFs faced outflows exceeding $290 million. This trend highlights a growing interest among investors in altcoins, which may be fueled by expectations of market rebounds or narratives influenced by advancements in artificial intelligence. Historically, Bitcoin has dominated the cryptocurrency market, but this shift suggests a changing investor sentiment as traders seek higher returns from more volatile assets. Such a rotation could signal a broader transformation within the crypto landscape, where diversification becomes essential for navigating ongoing market uncertainties. As investors increasingly explore alternative cryptocurrencies, they may encounter varying levels of risk and opportunity, which could reshape investment strategies. Additionally, regulatory developments and technological innovations may further impact these trends. In the coming weeks, it will be crucial to observe whether this shift leads to a sustained increase in altcoin popularity and how traditional Bitcoin investments respond to this evolving landscape. Ripple has received regulatory approval to expand its XRP and RLUSD services in Singapore. This significant development allows Ripple to offer token-based settlement solutions specifically tailored for banks, fintech companies, and various crypto firms operating in the region. Singapore has emerged as a financial hub, and its supportive regulatory environment has attracted numerous blockchain innovators. The expansion strengthens Ripple's foothold in the Asian payment corridor, which is increasingly vital as global demand for efficient cross-border transactions continues to grow. By enhancing its services in Singapore, Ripple positions itself as a key player in the evolving landscape of digital finance, fostering greater competition among payment providers. This move not only boosts Ripple's operational capabilities, but also supports the broader adoption of its stablecoin, RLUSD, across Asia. As Ripple continues to innovate and expand, the impact on the regional market could be profound, potentially reshaping how financial institutions integrate digital assets into their operations. Ripple's initiatives may lead to a more interconnected financial ecosystem in Southeast Asia. The Japanese government has proposed a new uniform tax rate of 20% on cryptocurrency profits. This initiative is designed to simplify the current taxation framework, which often imposes varying, higher rates on individual transactions, creating confusion among investors. By adopting a standardized tax rate, Japan aims to create a more favorable environment for crypto trading and attract both domestic and international investors seeking stability. This change aligns Japan with global tax standards, which could significantly boost trading volumes within the country. Supporters of the proposal argue that a unified tax rate will encourage innovation and growth within the burgeoning cryptocurrency sector, thereby positioning Japan as a leader in digital finance. Furthermore, this reform could serve as a catalyst for regulatory changes across the Asia-Pacific region, prompting neighboring countries to reassess their own cryptocurrency tax policies. As the proposal progresses, its success will depend on legislative approval and the speed of implementation. A swift enactment could solidify Japan's reputation as a forward-thinking hub for cryptocurrency, potentially influencing global trends. Crypto.com has achieved a remarkable valuation of $20 billion following a substantial $400 million investment from Citadel Securities. This milestone underscores the growing confidence institutional investors have in the cryptocurrency exchange, particularly amid a climate of market volatility and uncertainty. Founded in 2016, Crypto.com has rapidly evolved, offering a wide array of services, from trading and staking to crypto credit cards, positioning itself as a significant player in the digital finance sector. The investment from Citadel, a powerhouse in the finance world, signals a pivotal shift in market sentiment, as large financial institutions increasingly recognize the potential of regulated exchanges. This trend highlights the importance of strategic partnerships for navigating the complexities of the cryptocurrency landscape. The implications of this investment extend beyond Crypto.com, potentially influencing the broader market dynamics as competitors may seek similar funding. As Crypto.com continues to innovate and expand its offerings, analysts predict that this funding could enhance its user acquisition strategies and bolster its competitive edge, paving the way for sustained growth in the future. Europol has successfully dismantled Cryptomixer, a notorious crypto mixing platform linked to numerous ransomware operations. This significant operation involved the seizure of servers, critical data, and an impressive $29 million in Bitcoin, marking a decisive blow against money laundering activities associated with cybercrime. The $1.51 billion Cryptomixer operation underscores the increasing scrutiny on crypto mixing services, which have been exploited to obscure the origins of illicit funds, thus complicating law enforcement efforts. As cryptocurrencies gain popularity, they have also attracted criminal enterprises, making it imperative for authorities to step up their game. This crackdown may lead to greater transparency in the crypto economy, yet it raises concerns about the delicate balance between security and privacy for legitimate users. Moreover, as governments worldwide look to regulate the crypto landscape more effectively, industry stakeholders will need to adapt rapidly. The evolving regulatory environment will likely impose stricter compliance measures on crypto exchanges and users alike. In the coming months, the industry must prepare for a transformation that could redefine how cryptocurrencies are used and perceived, fundamentally altering the dynamics of digital finance. U.S. regulators have missed the statutory deadline of July 18, 2026, for finalizing stablecoin regulations under the Genius Act. This failure leaves a significant regulatory gap, creating uncertainty for major stablecoin issuers such as Circle and Paxos. The Office of the Comptroller of the Currency, along with the FDIC and other regulatory bodies, have yet to establish crucial rules that would provide a much-needed framework for stablecoins, which are increasingly vital to the crypto ecosystem. This delay not only restricts innovation, but also threatens the United States' position in the rapidly evolving global cryptocurrency landscape. Stakeholders, including investors and technology firms, have voiced growing concerns regarding market stability and consumer protection in the absence of clear regulations. The lack of a defined regulatory environment hampers growth and could lead to adverse market conditions. As the industry looks for clarity, the urgency for a comprehensive regulatory framework has never been more pressing. In the coming weeks, regulators will face mounting pressure to act decisively, aiming to support the burgeoning stablecoin market. A swift and effective response could foster innovation while ensuring consumer safety, and ultimately shaping the future of digital finance in the United States. Bitcoin has plunged below the critical $63,000 support level in a dramatic sell-off influenced by escalating geopolitical tensions between the U.S. and Iran. This decline of 5.7% over the weekend has sent shockwaves through the cryptocurrency market, as risk sentiment plummeted following the latest developments in the Iran conflict. Historically, geopolitical instability has been known to unsettle markets, and this instance is no exception. Compounding this issue are hawkish signals from the Bank of Japan, which have further rattled investor confidence. Investors are concerned that tighter monetary policy could lead to increased volatility across global markets. Bitcoin is now testing critical support near $61,000, a level that many traders view as pivotal for the asset's future trajectory. Negative trading premiums on platforms like Coinbase have persisted for an unprecedented 60 days, indicating a lack of bullish momentum. Market analysts are closely monitoring these indicators, which suggest a precarious position for the leading cryptocurrency. The broader CoinDesk 20 index has also seen a nearly 6% decline, reflecting widespread bearish sentiment across the market. As investors brace for potential further declines, the coming days will be crucial. Analysts predict that a failure to stabilize could lead to further losses, with many looking for signs of recovery amidst these turbulent conditions. Thank you for watching today's top stories in world news. Which of these developments shocked you the most? Be sure to like and subscribe for more updates.